All right. Hello, everyone. Welcome back to the Crypto and Coffee podcast. And with that being said, I hope you guys, enjoy the rest of this video as you grab a cup of tea, coffee, water, whatever the case may be, and just enjoy this little debate we have for you guys today. So in today's little debate, our core idea right here is is the US dominance being challenged, right? Or is it being replaced? What's going on in this current year, right? But before that, let's introduce our special guest, Mike. He's appeared on episode 4. Mike, introduce yourself one more time, the people that don't know you.
Absolutely. Can you guys hear me? Am I coming through?
Yep,
Awesome.
very well.
Awesome. So Mike Davis, I am the Business and Community Development Manager here at Gold Coast Federal Credit Union. We're a credit union that's been around since 1936. So I do a lot of our work with our select employer groups, a lot of community development work, a lot of financial education and stuff like that. And definitely just super interested in the crypto world, being in traditional finance my entire career. And I think there's a ton of opportunity for it. And that's why I kind of wanted to participate, in this discussion, on replacing the USD. Because right now there's a lot of noise around crypto replacing the dollar and disrupting banks, and in my opinion, that's not really what's happening. So I'm really excited about this this discussion we're going to have today.
Oh yeah, this is going to be fun. We're going to get a lot of different opinions today.
It sounds good. So I know this is a Crypto and Coffee podcast, right? But today we're mainly focusing on more of a fiat topic today. So I wanted to ask you, Cordell, right? Based on what has been happening for the past 4 months, geopolitically, do you think the US dollar is losing its dominance? Is it being challenged by any other currency for the reserve currency? What are your thoughts so far? Just give us a general overview.
I mean, look, so this has been a debate, a theme for a number of years now. I wouldn't say it's necessarily just the past 4 months, is whether or not the US dollar's dominance as a reserve currency is being challenged. I mean, look, it's always going to be challenged. And, if you just look at the downward trend over the past 10, 15 years and the total percentage of reserves occupied by the US dollar, it's absolutely going down. But we're still talking that, I think it's anywhere, I forget the exact amount, but we're looking at anywhere between 50 to 70%, based on the year that you're looking at of, reserve currency being used with US dollars. So is the dominance being challenged? Yes. Is that dominance at risk? No, not right now. I mean, it could change. These are longer term trends, but just based on the amount of global transactions that still occur in US dollars, the oil market is pretty much still priced in US dollars. Most commodities markets are all still priced in US dollars, and it is still the dominant reserve currency. So, I mean, that's just a really high level overview. And then when you start diving into the more, what's happened over the past 1 year, and then specifically over the past month since the war started, well, then we're going to get very different things happening based on the different, dynamics in the various markets.
Okay, understood. And David, do you think, right, will gold challenge US as let's say, the reserve currency or the reserve asset? What are your thoughts on that, David?
Well, that's the current trend. So with how things have gone overall throughout history, I think it's important to note that using fiat as the monetary system is the experiment. Using gold is the established standard, and using fiat is the experiment. So what we're arguing over here is whether or not the experiment is still successful or not. And those do tend to go for a good bit. We've seen other currencies go for a good bit, and the US dollar has gone well comparatively to those. But comparative to gold has a multi-thousand-year track record, and the dollar is measured in 60 years. It's in decades. So with that, we have gold seeming to make a comeback. We had China, Japan, and the EU as the largest holders of the US dollar as their reserves. China made a specific law to be able to sell those in favor of gold, like to buy gold. Japan has recently passed a bill, I'm pretty sure, that allows them to sell those to prop up their economy. And there are EU nations, or at least European nations, I'd have to verify on the EU part, that have also made the same move. So if all three of the top largest holders are doing that. And the other largest holders are going to be things like stablecoin companies. I can't say that the dollar is going to be doing too well in the near-term future. And there are three arguments that would point to US dollar dominance that I'd like to touch on at some point in this. One would be the petrodollar, which you mentioned. One would be global trade use, which you mentioned. And the last would be US military power, which was the trade for the petrodollar. And I'd see declines on all three of those.
So I wanted to ask something to you, David. What about using something else, some other precious metal other than gold, right? As like, let's say the use case, like let's say for instance you have copper, silver, aluminum.
Oh no, I don't think so, because gold has always been the global trade currency. Silver is more of the people's metal. Like you'd have to have a much larger amount of that to be able to trade on a country level. So you have people buying up silver, but countries not so much. Now, gold and silver will be used for industrial purposes, but as a currency, not so much.
Well, I think gold's industrial applications are definitely, fewer applications for gold than there are for copper, aluminum, and silver, right? I don't think that gold would have the same amount of demand from an industrial complex as would the other metals.
Yeah.
So Mike, from a credit union standpoint, right? You work in credit unions for, like, let's say, the past 10 years. What are your thoughts on the debate so far with gold and USD really just gold really taking over USD?
I mean, I think there's a lot of validity to it because we've seen, record inflation over the last, 5-6 years. And I think, it's been printing money. You see what happened to Greece, 5-10 years ago with having to be bailed out. And a lot of people have been saying that, the U.S. with our debt level, and just backed by the full faith of the U.S. government is Greece 2.0, which is really, really scary. But I mean, I do feel like the U.S. dollar is still dominant because the U.S., when you look at all the other countries, what other currency could really replace it as a dominant currency at this point, looking at, the commodities markets and what's happening. It is backed by the U.S. government, which we've all said is really not worth as much as being backed by gold. It is required for all of our taxes, which is a big, revenue source, obviously, and kind of churns that economic engine. And then, again, it's just embedded in gold, in global trade. And so it's just, I think, to move away from it, I don't see that happening in the near future, but I do see, optionality, and I see optionality more in the form of digital assets, on the crypto side, and I think that's kind of where this is evolving to. I don't know that we'll ever evolve back to the gold standard, but I do see us kind of evolving more into, kind of an optionality where, the weight of, the US dollar is not as heavy because people have different options in different markets to utilize these different currencies.
The other thing, when we start thinking about it, right, like a reserve currency, what is it, right? You have to really start thinking about even why do we have reserve currencies? Why do countries need it? So it's just really, it's a foreign currency that you're holding in rather large quantities by mostly your central banks or governments so that they can do their international trade, stabilize their own currency, their own exchange rates, and use it as a store of value. So that's hugely important, right? Because a reserve currency is a store of value. So if you need something to be a reserve currency, there's a number of characteristics that it has to have. So one, it's got to have a deep market and it's got to be incredibly liquid, right? You need to be able to dump it and exchange it whenever you need to. Then you need stability and credibility, right? If you're going to hold a lot of this in reserves, you need to know that the values are not going to fluctuate like crazy exactly when you're going to need to liquidate some to cover your debts or to cover your international trade. So you're going to need something that has a deep market, highly liquid, can be converted at any time, and is used on a pretty much widespread basis. So I think it's important that we all agree that those are really the characteristics that we need for a reserve currency, right? Because I think that'll help frame a lot of the debate. So does everybody agree that those are more or less the characteristics that you need for a reserve currency?
Yeah.
All right. Okay, so good. That might be the last thing we're all going to agree on. So, because now if you think about it like that, because ultimately what we're trying to say here, you know, I know I'm not going to say separating U.S. dominance from U.S. dollar dominance, right? Because I know David's going to take exception with that after. But what I would say is that how do you test it? And when would you know, right? So ultimately, the way that I look at it, especially coming from an asset management background and having been a portfolio manager for 20 plus years, it's ultimately, you know, how it's going to behave in a crisis. That's when you're really going to see the true test of any kind of currency, whether it's fiat, Bitcoin, or gold or anything, is how is it going to behave in a crisis, or how is it going to behave when things are not calm and the general world order is being challenged. So like we're living through a perfect example of this right now. So if you just, let's put the context for a second, right? We were coming out of a hyperinflation environment. We had highest interest rates and increasing at the highest pace ever in 2020, not ever, like the highest interest rate increases in a very long time in 2022. So this was the first time, aside from the 2018, you know, kind of interest rate rises that we were seeing then, this was like the largest monetary policy, federal action reserve that we've seen since the great financial crisis, 2008. And it took a long time for the inflation to settle down. I mean, we can debate whether or not inflation still has settled down from that crisis, from the post-COVID crisis. You know, we're not back at the 2% target rate that the Federal Reserve targets. We don't need to debate whether or not that's a good range, not the point. We were still in a slightly elevated inflation environment. And then comes along, and we have one of the greatest energy shocks since the 1970s, the greatest shock to oil supply that our generation has seen. I can't compare it to the early 70s. I wasn't alive yet, but it's a crazy shock. That could be inflationary. So we have to start putting all of these variables together, because this is a great way that we're going to see how it's going to test a reserve currency, or it's how it's going to test the US dollar. Because ultimately, and this has been true in almost every crisis that I have seen, the US dollar functions as a haven currency, right? That's just the way it was. And things go wrong, people flock to the US dollar and the yen. And that's going to become central to this debate here. Because if we're arguing that the US dollar is going to be losing some of that reserve potential and losing some of that luster, then it shouldn't be serving as a crisis hedge. And that's another argument I'm probably going to throw at David and see what he's going to say.
There's a comment that I saw on that. There was this one guy that was saying, I don't remember where, but there's one guy that was saying, it's like, you know what? I actually appreciate this. I was wondering what it was like to live through the World War, a pandemic, the Dust Bowl, and all these other things. Not at the same time, mind you, but beggars chooses and all. So like we've got the whole thing of millennials living through all these once in a lifetime events and getting tired of them. We have all these different things that pop up. Yeah, but it's not that those are happening specifically. It's more like those are effects of what's going on. So you have a war that's going on, but that's because the U.S. is being challenged, not because of anything else specifically. The U.S. is declining. The declining power is trying to exert its power over others to try to keep its position. You have these others that are rising. This is the BRICS versus the U.S. thing. Now, with BRICS, what is going on there is they've created a blockchain system with a unit called the unit. And this operates very, very similarly to what I was proposing with Symphony and Melody. You have this central unit that is merely used as a unit of trade between these different systems, and those different currencies are pretty much directly interchangeable through that. So with what they're doing, their entire movement was to allow for use of all the currencies, not a specific currency. Now, the unit in this case would become the reserve, not any one of their specific currencies. The yuan has been recently pushed by Russia as like if Europe wants to trade with Russia for oil, they can do so, but they'll have to use the yuan. Why they're using the yuan and not the ruble in efforts to promote the BRICS model of using local currencies for trade, I don't know. Like maybe they're moving to the yuan as a reserve currency. I don't know. Maybe their blockchain experiment failed. I don't know. But what I do know is those 2 points. They've made the unit, which is a blockchain system, not a crypto system specifically, but a blockchain system to move between their currencies. And Russia has proposed sale of oil in the yuan, not the yen, not the dollar, not the euro, but the yuan. And so like euro to yuan. And then Iran has also proposed sale of oil to Europe, and that was through the yuan. And this is also for access to the Strait of Hormuz. They said no more access for the U.S. and Israel, but if Europe wants to, you can do it. Just give us some yuan. And so basically what this is saying is they don't respect the petrodollar, which the agreement was not renewed. They don't respect the U.S. military power, which they hit a carrier, and the Houthis before them got a missile, subsonic, by the way, got a subsonic missile within 1 nautical mile of a carrier, and got the U.S. to retreat for reloads multiple times. And like these countries, they don't feel the power of the U.S. military anymore. They don't see the need to trade in the U.S. dollar anymore. And all of the BRICS countries that are made up, all the countries that are making up BRICS have over 50% of the world's oil production. They have over 50% of the world's just general production. And this was before other countries joined, like Indonesia. Now, as they're growing, they're getting more and more of that dominance on the production side. Now, we can make dollars, but they make stuff. And we're not talking about, like, no one cares if you use dollars to buy a Tamagotchi, but they're producers of oil, of wood, of things. If we print dollars, like we can make as many dollars as we want, but if they don't have to use that to trade because they're using their own currencies, the US dollar doesn't matter. And BRICS does more trade intra-BRICS than between them and the G7. China, as an example, the US used to be the world's most dominant trading partner. China took that spot in 2024. We're 2 years past that, and they've been growing. China has more money moving through their system. If you look at the M2, they also have more value moving through their system. If you look at purchasing power, and this is because the U.S. power, which is why, like, all these things are connected. The military and the economic are connected. This is why back in the result of World War II, it was said that World War II was won off of British intelligence, Russian blood, and U.S. steel. It wasn't U.S. air dominance. It wasn't U.S. strategy. It wasn't U.S. Military prowess. It was U.S. steel. The U.S. power was manufacturing, the same manufacturing that we shipped over to China. China makes all the world's stuff. They now have the world's best currency, or at least as seen by global trade. So if we ship away the entire reason for using the US dollar, and then we can't back the petrodollar, which was put in place in order to keep the backing of the dollar after we got off of gold. If we can't keep that because Saudi Arabia won't renew the agreement, and then we spur all of the Middle East, which is like the largest oil producer, because we move all of those defenses over to Israel and let them get hit, then none of them are going to be happy with us. And this is after we manipulated the price of oil to try to hurt Russia, which is when the petrodollar agreement failed to renew. And this is after trying to sanction Russia, and all of that failed because Russia was able to trade with other sanctioned countries like North Korea and Iran. And then the rest of the world saw, oh, okay, so these don't hurt as much anymore. So like the US dollar, the power of the US dollar as a weapon, as well as a trading medium, seems to be falling. And the reserves have fallen as well. Like they used to be roughly 60 to 70%, like you mentioned. This year they're at 55. And China's still
it is that low. Okay. No, sorry to interrupt. I was just saying, I thought it was as low as 55. I just said 70 because I remember that being a historical number.
Oh no, that was my final point. I can keep going though. More into the military, more into the economics. I can go.
Okay, but so I mean, I don't think like there's a lot of ways that we can debate that and say, okay, as much as the BRICS can't cooperate. They're never going to cooperate and determine a common philosophy, a common currency. Each one of those countries wants their own dominance in the whole thing. But I don't even want to get to that yet, because even just based on everything that you just said, if all of this were true, why is the US dollar getting stronger right now? Why is it getting so, pardon?
On which market?
The Forex markets. I think if you look at it just look at DXY, if you look at the US dollar index, it's been appreciating quite a bit.
Yeah, but the Forex is a US controlled market, isn't it? The ruble was falling on that, and Russia wasn't trading on there because Russia was trading with China and other sanctioned countries. So by all measures on the Forex, Russia was doing terribly. But if you look at Russia, they're still fine. They've been crashing for years now, according to the Forex. But over there, they're doing better than ever. China is buying directly from them. They built a pipeline directly to Russia. They've been buying directly from Russia. Like, they're next door neighbors. Like, this should have happened a long time ago, but it got started up because Europe was told to not buy oil from them. Now this got started up, and now they're trading with the world's largest economy directly. And they have the production power in order to send drones over to Iran for war. They have enough production power to fight off NATO with what they produce on war. So they're doing well. With us, we've got grocery prices increasing and people talking about like how they can't afford things. Over in Russia, they're still fine. Same as in China. Like you've had red note videos running around of them being able to buy groceries and grocery hauls. The same videos that we used to do. Like, they're doing fine. On our market, yeah, but our market specifically excluded them because of the sanctions.
Okay, but our market's still the largest one. And, especially when you do a trade weighted or, whatever weighted, normally you do it on trade weighted. Right now, you're seeing the US dollar, it's people are flocking to it as safety. And if we were trying to see, I would have expected gold to be much more of it, or even the yen a little bit, but no, we're seeing US dollar. The issue here is that we have to take into account is that, Federal Reserve policy, so in other words, central bank interest rate policies, currency, global fixed income markets, they're all related. So right now, the market is saying higher oil prices equals higher inflation, which equals hawkish Fed, which means stronger dollar. So that's really the chain of reaction, and weaker gold for that matter, because gold doesn't yield anything, and gold is, going to be inversely related to the US dollar in this environment, despite the fact that it's normally a crisis hedge. So, but it's because it's all an expectation of rising interest rates. So my whole position is the US dollar is still dominant because of the way people are still going to treat it as the crisis hedge. So no matter what else is going on in all of that, until I start seeing it not being used, and again, I get it, it's kind of a closed Western market, but that's not 100% true, because we still have the petrodollar as much. Like, do we have stats even? How much of the world's oil transactions are done in US dollars versus other currencies?
We can look it up. With gold though. What we've seen is that as the U.S. continues to manipulate markets, people find other ways to buy, because the U.S. was manipulating the price of gold. As with the nickel, there was a thing in court probably 2 years ago of nickel contracts, and because it was found that if the contracts were honored, that it would have endangered the markets, and so the contracts were not going to be honored. That guy lost on nickel because of that, even though he had bet correctly, because he had bet against the market. So our markets are paper, and people are figuring that out. So when gold shot up because China was buying it up, people continue to buy that, and now they're buying it over on Chinese markets more, because over here we manipulate the price down, and we continue to try to manipulate the price down. Any sales that happen over here are at a loss when they can make more money over there. And then anyone that's buying over here, if we don't have the gold because that's actually being sold elsewhere, then the buyers are out of luck too. So they may as well go over there. Eventually, as gold goes to where it will make the most money, people are going to find out, okay, let me go over here instead. And all that motion is going to go over to China instead of the US, because our markets are manipulated and paper. Now, if you have the same that goes on with the dollar, now within the dollar system, not this stuff doesn't happen overnight, but within the dollar system, we have a lot of algorithms that trade. And if those haven't been updated, they're going to continue to trade the same way. If oil goes up because the dollar is backed by oil, then that means that the dollar is going to go up. But if those algorithms do get updated according to what happens later, and investors are usually behind the curve, not ahead of it. Like, you have a small set of investors that go ahead of the curve, but most investors, like algo traders, go behind it. Now, with things like that, if you have a siloed market that's based off of people who are still trading within the US dollar, or people who are still connected to the US dollar, and you have another market over there where they basically don't care about the US dollar, you have well, who do we have on that? We have Europe, we have Japan, we have all these other countries that are still tied to the G7, and most of them have trade that goes through the Strait of Hormuz. So if you have them being hurt by recent events, and the dollar, which is still over there, which is kind of segregated away from all of the activity that's happening over here, they can still trade with Latin America. They can still make a lot of their own stuff. They still have plenty of resources over there. Well, okay, the dollar's probably going to rise on that. But on the larger scale, like if anyone sees what's going on with regards to BRICS, and they think, okay, well, if I buy over there, that's going to be safer. They all seem fine. But the US, they're inflating away their own currency. Well, they're probably going to go over in that direction. Like as anyone would tell you about the stock market, the past is not an indicator of future success. So yeah, the US has been successful so far, but we've shipped away all of our advantages, and we're still just riding on, yeah, the US dollar will do well because it's America. Now, like, you have a lot of Americans who are going to be like, "Hoorah, America!" But like, eventually, if you dig away all of the sand beneath the house will fall.
It's true. But one thing, if I could just jump in, guys, one thing I would say is, all great points. I mean, all great points. And I think, I don't see another currency taking over as the dominant, fiat currency. And the reason being is because I feel that crypto in itself has really just exposed a lot of inefficiencies in traditional banking and fiat currency systems, slow transfers, high fees, poor user experience. I feel that there's definitely going to be a hybrid. I think the US dollar is obviously going to play a part, because it's always going to play a part, but I think it'll be a hybrid between, the US dollar, obviously, regional currencies, talking about China, talking about Russia, a lot of the Asian countries over there, using regional currencies, and then stable coins. I mean, look at the race now for, some of these government entities to create stable coins, to kind of create, digital dollars on blockchain rails that can obviously, we're looking at this evolution of gold to, faith of the US government, to now multiple different currencies as well as stable coins. And I think that could be another kind of evolution in this, where we see a couple of different options where, yes, the US government is not as dominant, or US dollar is not as dominant in fiat currency as it is now. I think it's still going to play a part, but I don't think it'll get overtaken. I just don't think China has the trust right now of the world stage, the world governments, to be able to say, okay, yeah, we trust China to be this currency. I just don't see that happening. And I'll be honest, I mean, the US is kind of eroding trust across the world stage too right now, to be quite frank. But no, I do. I think, you've got like the US dollar's got that foundation trust. You've got stable coins, which is that speed layer, that global access. Crypto is kind of that innovation. You've got the, that optional layer, and then, the other currencies, regional roles. You got Russia, you got China. You've got all those Asian countries over there that are working. And you look at some of these Latin American countries that have taken on, like Bitcoin, right, as their currency, like El Salvador and stuff like that. So I think it's going to be a mix. I definitely agree with you, David, though. I don't see the U.S. dominating like we have in the past, but I can certainly see other currencies kind of moving up, but I can't see them taking over.
So let me ask this question, right? Back, let's say back in old times, right? Most countries, most merchants use gold as a source of, let's say, real money, right? Is that true? Okay. So let me ask this now, right? I see that most banks have been buying up gold, most jurisdictions and countries are buying up gold, right? Would you say gold is the current solution right now for all inflation, or let's say a new reserve currency, or is it just a fear insurance, right? Mike,
No.
would you like to go first? Just
with gold?
Yes. Do you think it's a solution or more of like a fear insurance based on, like most people buying it up?
I think with technology right now, it's a hedge, because I think a lot of the people that are investing, that have been investing for a long time, right? The folks that are maybe in the boomer generation, they don't trust, crypto. A lot of them don't try. I mean, some do, don't get me wrong. There's exceptions to every rule, and I'm not just trying to throw everybody in a box, but being in traditional banking, just trying to get somebody in that age group or that demographic to download an app, a mobile app, to do online banking. They don't trust it. They're like, I don't want to get hacked. I don't want my money getting stolen. Valid concern. And I think that generation really leaned on gold because that's what they knew. That's what they grew up with. And they leaned on that. And what was safe to them. They haven't always trusted technology the way Gen X, millennials, all the newer generations that have kind of grown up. I mean, I'm Gen X, so I had kind of an analog, 80s and then a digital 90s and, beyond. And so I have a lot of trust in the technology. And then, of course, I have a son who's 14, and I mean, he can't even fathom not having the technology. So I do think that as these older generations that have kind of really held on to gold as this, this stable thing, as they start to, move on, their kids are managing their money. I think because of the technology, and you look at it, the technology is a disruptor. We've got neobanks, we've got fintechs, we've got crypto, we've got all these different things that have come up due to technology. I mean, look at, back in the day, you joined a bank, Chase, Bank of America, whomever. Why? Because they had an ATM on every corner. If you had to move to California or New York, you knew you had a branch to access your money. Now you can join my credit union down here in Palm Beach County, and with our mobile app, you can bank with us anywhere, right? I mean, you got your debit card, we got 40,000 ATMs that are free. So I think with technology, it's pushed the younger generations to have a little more faith in, okay, we don't need this block of gold to show value. We have the value, and we're showing it in other ways. And it's not just this one way. It's kind of a hybrid of maybe 4 or 5 different, kind of different opportunities that are helping to move money along and keep value.
Okay, Cordell.
Yeah. So when it comes to gold, the way I look at it, I mean, gold does nothing. And that's the traditional argument against it, right? There's no yield, and it costs you to store it somewhere. So if you're going to buy 8 million pounds of gold, it's not sitting in your basement. You have to keep it somewhere. You have a storage cost. So that's the traditional argument against gold. There's plenty of people that are going to argue against it and stuff like that. But no, I mean, gold is essentially a money-losing proposition in real terms. The role that we have, if you think about, let's say, the main drivers of it, and this is true of almost any product, one, it's supply and demand. So where is that supply demand going to come from? Well, normally you have it as jewelry, let's call it as a luxury item from personal consumption. You have it as potentially sitting in reserves. And, those are pretty much the main areas that it's going to be. And then for investments, it has been a hedge, especially against inflation, because if we see, US dollar, because lower interest rates typically mean a lower US dollar. And if you're not going to get the good yields or good return out of the US dollar, people tend to go to gold instead. So especially during a recession, if central banks have to cut interest rates aggressively, which is going to weaken the US dollar, people tend to move to gold to compensate that as their hedge. So yes, it's the crisis hedge against a recession. The crisis we're seeing now is not a recession. It's a crisis as an energy shock where we haven't even seen the full effects propagate through the system, but most people would have found it counterintuitive that gold is not performing well right now, considering it's a crisis. However, this crisis is being precipitated by potentially higher inflation, which means higher interest rates, higher US dollar, lower gold. So for gold, you know, the one thing that we've only mentioned very briefly here is that the US debt, the level of debt, is a ticking time bomb. And that has been one of the major negative forces against the US dollar, is that everybody holding it in their reserves is starting to worry, like, you know what? US could go bankrupt. You know, that's an argument. I don't think it can, but that's the theory here. With this amount of debt, many people are saying the US is technically an insolvent company or something like that. So if that's the case, no kidding, people have going to be dumping US dollars because it's just risk management. We're not going to maybe dump all of it, but we're going to want to rotate to other assets. So if we all agree on that, high debt, US dollar, let's even forget the war in Iran right now. High debt means we're worried. We don't want to maintain all of these US dollars in our reserves. So where are we going to go? What are our choices? So if our choices are essentially gold or Bitcoin, that's where this debate goes to. So if we do believe that the US dollars as a reserve currency is being challenged, and it is it being replaced? No, there I completely agree with Mike. For it to be replaced, I think we would need some insane structural changes to the entire world order. So gold or Bitcoin? What would you do if you have to go somewhere? And are those realistic options? Remember, when it comes back to this.
Oh, there you go.
Right. Oh, yeah, I just had to unplug it and plug it back in. What was the last thing you heard me say?
Bitcoin or gold.
Yeah. So if you're stuck with your choice of either Bitcoin or gold, and again, it comes back down to how I wanted to set the stage right away, was the characteristics of a reserve currency. You need to have a deep market. They need to be easily exchanged, and you have to have the confidence and all that. So just start looking at gold and Bitcoin and seeing which one of those boxes are going to be checked. So neither of them are going to satisfy all of those boxes.
That is true. So let me add to that point, right, Cordell, right? You said Bitcoin or gold, right? From what I've seen is that the US have mainly overused the dollar as, let's say, an economic weapon through sanctions, right? So which
one way, yes.
One way, yes. And I know David's probably gonna just make a whole argument on this. He's probably smiling his head over there, right? But David, how do you see Bitcoin or gold taking that power away from the US and giving back to more than like 200 other countries, or just even BRICS?
Gold, yes. Bitcoin, I'm not so sure about. Now we have El Salvador with Bitcoin, but El Salvador this year has been buying gold, and I did not mean to get this onto a gold versus dollar thing, so I'll just state that right there. Now, I see great value in crypto as a technology. In crypto as the individual units that are used right now, not so much. Bitcoin, I'm not so sure about. Ethereum, I'm not so sure about. But blockchain, the underlying technology of crypto, yes, that has already been adopted by multiple companies, including or organizations, better, including BRICS. BRICS, like I said, created the unit, which they debuted back in 2025, just last year, to try to create a system for trade between their countries. They're going to test that for a good bit before they fully release it, but they did debut that, and they had been working on it. Now, that is the technology of crypto, not the units. They're not trading in Ethereum. They're not trading in Bitcoin. They're not trading in Litecoin or Doge. Sorry, just sorry, Twitter there, Elon Musk. But they did use the technology. That's the point of it. Now with that is the thing that gets rid of the inefficiencies. That's the thing that allows you to trade between multiple countries without having to trust the other countries. That's the benefit here. Now, with gold, gold can be seized. With the US dollar, that can be frozen. You can get sanctions, you can get tariffs. Any one singular player and their currency can do that. The entire reason behind BRICS, an economic bloc, not a military bloc, but an economic bloc, was that they wanted to create a system where you could not sanction the others, where you could not tariff the others, like, well, maybe tariffs, but you could not sanction the others. You could not freeze their assets. You could not prevent them from trade. Their biggest thing was being able to hold multiple currencies, to diversify their currencies, to be able to have sovereign control of their currencies, so that way they couldn't be stolen either, and to be able to trade between each other using those. So, like, those three pillars basically meant blockchain, and that's what they made. Now, that doesn't mean US dollar, that doesn't mean yuan, which is why I'm surprised to see both Iran and Russia pushing yuan instead of their own currencies. But like, what that means is that they can all use their own currencies. Like, that was the entire purpose of BRICS. If they stray away from that, who knows? But like, what I see on that is not necessarily gold versus Bitcoin versus US dollar. Now, there are gold stablecoins and such, and I'm working with a company that's working on real world assets, and they're talking to different companies, such as one's trying to make a gold credit card or a gold bank, and that what they wanted those powered by is blockchain. So you have different companies exploring this stuff, but it's not necessarily going to be gold versus Bitcoin. Between those two, I'd say gold instead of Bitcoin, but like, it's not necessarily going to be those. The blockchain technology is what I think is going to win out overall, because like, you've got regional players and everything. Like, if the US goes from being the global one currency for the world, and descending to there being 2 or 3 different currencies for the world, or maybe more, like, that is still keeping a measure of its power, but that's also decentralizing the power. And that's where a medium for trade where you don't have to trust the other party would come into play.
So let me ask you something, David. Do you see the US dollar collapsing, or would you think like the world will transition from that to, like, let's see, from one reserve currency to many?
Well, it depends on the measure of collapse. There are different ways that this can go. Overall, I think that since the payment on the debt is now exceeding the military payments, yeah, it's probably going to inflate a good bit, especially once all the bonds come rushing back. How far that'll go, I don't know. I'm preparing for a hyperinflation scenario, but that's a worst case scenario. Hope for the best, prepare for the worst kind of thing. Now, with that, does it go that far? I don't know. But if it collapses from the top currency that's traded all over the world to one that's shared amongst others, that seems feasible. That seems extremely feasible with what's going on. You still had the story this year of the US being the world's top military, the world's most powerful military, when in reality, it's really only the world's most expensive military. We make 60 missiles a month, and Iran makes multiple hundreds if you include their drones, which are missiles. And if you have to use, by your own military doctrine, if you have to use 2 to 3 missiles to shoot down any one, and you only make 60, that really limits your options. And the reason why it's only 60, with like what, 6 interceptors amongst those, the reason why it's that low is because of military corruption. We pay $1 trillion to these companies, and half of that goes into their pockets just before anything's made. And then they try to make those things by hand in order to try to maximize their profit on that, because they are limited to a certain amount of profit. So what they do instead is they limit their own production, so that way they can profit even more. Like, there's a great deal of corruption there. And what could have happened here is embrace capitalism like you're supposed to as America, and expand that base a little bit instead of constantly buying from these. Which are like the same 5 companies, which are running up the price. Use capitalism, get some competition in there, and now you can actually get something made. But that wasn't done. So what we have is corruption, and it runs deep on that. We have, now everyone's shown the chart of military spending making up half of the payments, but that's discretionary spending, which is a very small portion of the total budget. Now, what we actually have is, like we have payments on the interest alone exceeding that. And that happened what, like 2024 when that overtook it. So we've got severe problems on that debt, and that's probably not going to be going away anytime soon. I think that measure was passed where I think that moment was passed where we would not be able to make payments on the debt even if we started where we would not be able to pay our way out of it even if we moved everything over to it. And that, granted, that considering everything stays the same. If we grow the economy, yeah, sure, we could potentially grow out of it, absolutely. But we've got some serious things to change before America can decline. Every empire loses for the same reason it started declining in the first place. And like in that case, like it's not turned around. The ship's not turned around yet.
Yeah, I mean, it's hard to argue with that. I mean, there's a lot in there.
Mike,
a lot in there. Go ahead, Mike.
Yeah, I mean, great points, obviously, David. I agree with a ton of stuff you say. It's kind of funny, the US government still values their gold at $42 an ounce due to the Bretton Woods system. And I've heard varying people talk about if they were to revalue it at the 2,000 plus an ounce it is now, what that would do for inflation in the currency. But I've heard, both sides of that it could blow up our system or also make our currency worth a whole lot of money. But obviously way above my pay grade. But yeah, no, I totally agree with you. I think, the real opportunity is bringing, all of these aspects together in a way that actually benefits people and not just markets. At the end of the day, the dollar is still the foundation. I feel like blockchain is the innovation layer, and institutions like banks, credit unions are the trust layer, right? And I think the future, isn't about choosing one over the other. It's about combining them in a way that actually improves people's financial lives, right? I mean, that's the bottom line, is we're all in here to improve our investments, do well for our families, create a legacy for, generations to come. So I think, the winners aren't going to be the most decentralized or the most traditional. They'll be the ones who deliver kind of the best user experience while maintaining that trust, right? So I know it sounds super vague, and I apologize for the vagueness, but I think it does boil down a lot to user experience too. And I think that's something we haven't really talked about a lot today, is just the user experience of, yes, the governments are going to try to create, the dominant fiat currency. They're going to try to do this and that. But again, it's all down to the user. And as we've seen with fintechs, neobanks, and blockchain, when things are easier and they cost less, users typically flock there. So I think that could be another driver in this valuation that we kind of see evolving over the next 12 to 18 months.
So let me ask something, right? As we're coming to the closing of this debate, right? And I want each and every one of you to just give your honest opinion, right? Do you think this is the end? Are we watching the end of a system, or is this the evolution of, let's say, the US dollar, gold, or probably a new system with Bitcoin?
Who wants to go first?
It's a very tough question to answer.
It is. Great question.
I mean, it's the question, really. It really is the question that people have been debating for a while. It's just the way I see it. I just haven't, there's definitely, what are the cliches here? Some green shoots that would sort of support a change in the wind, but we're just not there yet. I just don't see any signs that the structure that, we're talking about major structural changes into multiple systems within the global order and global economy. There's green shoots, but it's just the amount that it would take to really displace the US dollar in the current system, replacing it with gold, first of all, replacing it with gold. You're talking about sending us back 200-300 years. All right. You're pretty much sending us back before the US Civil War is pretty much the way I would put it.
Yeah.
right? If I remember my history correctly, and not like I ever, they don't really teach the U.S. Civil War in Canadian high schools. I've read a lot, but a lot, of the changes when they started using U.S. as fiat instead of gold was after the Civil War. So we're talking about going back 200x years, okay, whatever, almost 200 years. So that's a huge step backwards if we think about it, right? I mean, again, David's right. When you think about the history of the world compared to the history of fiat, we're technically still in the early innings. So it could still very well be an experiment. So going back to gold is essentially saying this experiment failed. We're going back to the way it was. But there's a reason why we got away from the gold standard. There's a reason why we got away from pegged currencies. It's necessary for a capitalist market, especially a competitive capitalist market across the globe. Whether we're going to progress to something newer, like a blockchain kind of currency, stable coins, whatever, I mean, that would be the step forward. I think most of us here would agree. Many people out there would say, no, that would be a disaster. But again, time will tell. It needs to be tested. And it's not something you just want to do overnight and see how it goes. But I think it's like, there's just, with all of the forces, and every time, I see like a war like this happen that threatens global supply chains or anything like that, it's just going to impede any change. And at this point, I think it's just going to maintain the US dollar dominance. The more you're going to have episodes like this right now, barring another great financial collapse or a debt collapse, it's always going to, whatever progress is being made to go somewhere else, I think it's going to push it right back into what we're comfortable with, which is right now the US dollar. So I don't know what it would take to displace it entirely. Yes, green shoots, trends against it, but I mean, we're seeing it right now. I just pulled up the chart on the trade weighted US dollar. Like, it's really, really V'd off a bottom, and it's potentially hitting the downtrend line now. So if the US dollar continues to strengthen, it's all based on inflation beliefs, whatever, but we could see a major rally in the US dollar continuing if this gets worse.
Yeah. David, your thoughts on, my closing debate question?
No, frankly, I hope I'm wrong, because I live in the U.S. I make money in the U.S. dollar.
Yeah.
Like, the more time I have, the better for me. If everything ends up great and nothing bad happens, like the U.S. dollar just rises and reclaims its place, absolutely. Like that, my retirement will be back on in that case. Now, but. With regards to gold or using the U.S. dollar, well, I don't think that it's necessarily that simple. But I don't think that going back to using a unit of trade, like a single unit of trade outside of the currencies, would necessarily be a move back. Now we've got advancement throughout human history, yes. But we also have periods, like brief periods, of great stupidity within those periods. Like you don't usually, it's very, very rare where you have this brief flash of brilliance that moves things up. But a brief flash of stupidity, absolutely. The burning of Alexandria, as an example. Like, we had a lot of knowledge that was missed there, specifically because some guy had the great idea of burning down the library. What did the library do to anyone? No idea. But with regards to getting off of gold, I think that may very well have been one of those periods. Now, the U.S. got the Bretton Woods Agreement, but what we were supposed to do there was to be the unit of trade for them as the holders of the gold. We didn't do that. We spent more than what we had, and I'm pretty sure that's the reason why we got off of gold. Not yeah, sure. They gave reasons. They gave their reasons, but there were understated reasons as well. Like, he wasn't going to say, yeah, we spent more than we've got. Sorry, guys, and that's why we're getting off it. So I do think that may have been one of those things. Just moving on to fiat from that, because like essentially what that would mean is that we got onto fiat from fraud, not because of a good reason. So if we move back onto a system where we have an underlying unit of trade that connects these different systems, I think that would work better, at least better than what we have now, because what we have now is a cudgel that can be used against others. And that doesn't really work so well if you're trying to have free trade, which is what America is supposed to be about.
Yeah, great point. Great points. All great points. Yeah, I mean it's gosh, it is. I'm in the same boat as you, David. I don't want it to be knocked off of the kind of the head of the world trade. It's definitely beneficial doing business in America. I think there's two things at play in America. Here it's our regulatory environment, which is on the financial services side, is archaic compared to other nations. In South America, Europe, and laws are very, very slow, especially in the financial services industry, to move along and adopt new technologies. And I think that's definitely working against us and weakening us on a world stage, because we have a lot of folks a lot of other countries that are definitely more invested in moving that technology forward. But I do think that the U.S. being one of the, obviously China's up there too, but one of the largest consumer of global goods, will still keep us top of mind. But I do agree with you, David. I think at the point, there's got to be a multi-layered approach to moving money, to trust between nations, to making sure that the value stays, and it can't just be based on one currency. There's got to be guardrails. There's got to be, everyone's got to be in line, whether it's one currency, whether it's a couple of currencies, whether it's stable coins. I really don't know, but I do think the U.S. will kind of continue in this dominance, and unfortunately be able to weld that currency like a cudgel until we decentralize things, or we have laws that are decentralizing, not just for U.S. currency, but kind of across the board.
Okay, understood. Well said. Anyone has any other points, before I close off?
I don't know. We said a lot.
It was a great discussion, guys. Thank you.
Yeah.
I would say this has been a great debate from, David, Cordell, and, Mike chiming in. And honestly, we should do this more often. How about for the next, episode 15, we think of something, probably a part 2 to this debate. What do you guys think?
Sounds great.
No, I love it. I mean, our role here is to debate all things related to Bitcoin, blockchain, cryptocurrencies, and that doesn't exist in a vacuum. So luckily it does find its way into the normal economic, traditional finance world. So yeah, I mean, we should also set something up so our amazing listeners could suggest some topics that they want to hear us debate on. So love to get that going too.
That also sounds like a good idea. So with that, we're going to end our episode 14. We had a nice debate between, gold versus the US dollar, and we had our special guest, Mike, here. So with that, let's end off today and see you guys for episode 15 next 2 weeks.
Thank you
Thanks,
so much,
gentlemen.
everyone.
Take care, guys.